The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, quite the interesting market day when it was all said and done on Thursday. We were trading relatively mixed through much of the session, and especially in the grain trade, and then found some late session buying across corn, soybeans, and wheat was our upside leader. Let's talk about the market action we saw on Thursday. Joining us here today is our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you. And before we jumped on, we were both kind of talking, trying to make sense of Thursday's action. Quite an interesting day in that grain and oilseed trade ahead of the June WASDE report on Friday.
Right.
Bryan.
So you're right. I was just going to say, you got the June WASDE report out, you had export sales out today, and then you had prices that sagged pretty hard on the overnight with what I'm going to call maybe a wetter forecast. And then by late morning, noon, it seemed like the forecasts were either turning a little less wet or shifting the rainfall totals maybe a little further north than where they were yesterday, which appeared to be more right where they needed it most.
Mm-hmm.
And so there's rain in the forecast, but if you're really dry, if you get a half inch, it doesn't help a whole lot. The saving grace is maybe some cooler temperatures here, but you're heading into a time of the year where temperatures typically keep edging higher.
Mm-hmm.
And so timely rains are critical. It's weather market. Welcome to them. Bearish, in the morning and bullish by afternoon.
Yeah, that's a great point. And I know, too, that drought monitor came out today. And it seemed like as soon as that drought monitor came out is when we started to see some more of that activity along with the midday weather model runs. And, expansion of the abnormal dryness, moderate drought, or severe drought along the Missouri River. I'd have to think maybe that played a factor too, but that's all tied up in this weather market, which of course is always volatile to trade when we're in weather market season, Bryan.
It is. And so, when you look at that drought monitor map and there's no shortage of, with the internet, there's all kinds of people that'll analyze that versus another year. But when you compare it to, let's say, 2012, it actually looks worse than 2012, in my opinion. And if you're in some of these really dry areas, you're probably are green at this point. The difference is in 2012, by about mid-June, it just stayed dry and got warmer, and rain was hard to come by. This year, we've got it in the forecast. So there's that. And then kind of the El Nino crowd is saying, look, it's just a matter of time. We're going to shift this pattern. We're going to bring that Gulf moisture up, and we're going to move the moisture that's been out west and in the panhandle regions, and we're going to push that east and north. That seems like the likeliest scenario. Keeping a wet rag on the market today, though, is again a confirmation that apparently our corn must have some smell to it. Nobody seems to want it. 6.8 million bushels of old crop. The USDA is probably going to have to make another, slice somewhere, either this month or next. Probably tomorrow, maybe 25, 50 million bushels on the export front. Soybeans okay at 7.6. Wheat pretty dismal. Just nobody seems to want our product for the moment. We are overpriced, and you've got other countries that are, Brazil can price less. They've got ample inventory coming into the marketplace. Farmers, don't have enough storage space. So those are all elements, but still, my goodness, we're at reasonable prices in front of a weather market. You would think that somebody out there would kind of stack it up pretty quick.
You would think so, and I'm glad you brought up the exports and the report on Friday, because to me, I'm in your camp. I don't think USDA is going to do maybe all of it, but it feels like they could justify up to 100 million bushel cut in old crop corn export demand, ethanol demand. Maybe those are the two areas where they could cut some of that from the balance sheet for corn. But I don't think they'd go that far on this report tomorrow.
I don't think so either, and that's why I kind of said it's a small amount. But you're right, a small amount this month, a small amount next month, small amount and all of a sudden it is that 75 or 100 million bushels, and I think you're probably on the right track right now. And then there's on the other hand, so if I wasn't looking at you, I was actually bringing up that drought monitor map. I want to kind of reacquaint myself with just how kind of nasty that kind of looks at the moment, and whether
Hmm.
that continues to trend that way and get darker yellows and browns and purples and reds, or if it's just a dry stretch that all of a sudden disappears. So I think farmers want to prepare for both. I really do, because when you look at the southern hemisphere and what Brazil appears to be harvesting, it could be a significant amount of crop available to the world cheap. And you and I've talked about this. I've talked about, well, what happened to demand? Where is it? Does our product, have a smell to it? No, it's just the end user sees that it's cheaper and they just keep not wanting to spend money. When you look at high interest rates compared to a year ago, and just the cost of shipping and cost of holding grains, I
Hmm.
think they've gone hand to mouth because they've seen Brazil's crop availability coming more and more to fruition. Our crop, certainly is major league important, but not as important as it was 5 years ago. So there's that. I think that's going on there. And unfortunately, it happens just, the exports happen at a time where you're coming off of a major bull run a year ago. We're still stuck in a downtrend, and we haven't seen the market respond to lower prices like you might expect when you look at the percentage change in price. $8 corn last year, 5.50 corn this year.
Well, and I'd heard some chatter earlier in the week as well, maybe something else capping some of the bull run in the markets here this week has been some farmers selling not only US but South American farmers as some guys and gals realizing they got to catch up on some sales. I wonder if you've heard any of that chatter as well, Brian.
Oh, I have, and then the U.S. farmer's very smart. He's on top of things, and when he sees December corn, in fact, I was talking to a number of farmers. I've said, look, if I told you in January that we're around $6 a bushel on the board, and I fast forward to the first week of June, and we're close to 550, but in that time window, you've got a record second crop out of Brazil, and you've got dismal exports, you'd probably say that's a pretty good price. I better count my blessings. And if I told you planting was ahead of schedule and emergence ahead of schedule, if I just used those variables, you'd say, God, I better be a seller. I think you have some merit in what you're saying there.
Hmm.
Um, we have more corn acres, and there's a lot of farmers that don't have all the storage they need to store their corn. So being so slow on export on new crop sales for so many early in the season, hoping for better, that now you're right, it's catch up time.
Over in the soy complex, a little bit of the same in soybeans on Thursday. We saw some early spread activity in intermarket spreading, and bean oil again kind of seems like it's propping up this soybean market here this week, Brian.
Yeah, it is. And when you look at what the products have done there, they've rebounded some, and meal was off today, but oil was up sharply, and it looked like the traders were buying. But even at that, meal was only off a buck, but the oil, that's a lot. So in a comparison, uh, when I look at the value per contract being off in meal by $1, it's kind of neutral, maybe down a little bit. Oil up 150, 200 points. That's a lot of value. It's $6 a tick. 200 points in the front month July, that's a $1,200 move. That's a pretty big move today in oil. So you've got good demand underneath the market there. Ironically, there was some talk today about Cargill maybe postponing or shelving for now one of their plants because of I think the wording was they're concentrating on where they purchased a different plant in Owensboro or somewhere in that region. And so it puts a little doubt to all this kind of robust demand that you might see for the soybean oil. At least it did today a little bit, but it didn't seem to matter. The market went up anyways.
Yeah, very, very true. How about that wheat market? It felt like led by the hard wheats on the day Thursday with Minneapolis, really the upside leader. I'm getting a lot of feeling from folks that we could see the global balance sheet maybe tighten up a little bit on Friday's report with the production issues in China, Australia, etc. Do you have that same sense, or what's your take in the wheat market here this week?
I do, because you're not you're not adding any bushels in really in the northern hemisphere much, uh, it, compared to what they've been forecasted at. When you look at our spring winter wheat ratings for soft red, they've been pretty good. Now all of a sudden the Midwest is dry. You got to think that this soft red might, it's right at a time where you don't want dry. So
Mhm.
so there might be some element of the market anticipating maybe this crop, the soft red won't be quite as good. The hard red's kind of a lost cause. We don't see that crop growing. China has had such significant flooding, so quality wheat there. I don't know if that'll show up on tomorrow's report, but it certainly is in the market. The market knows that. So I think we've kind of maxed our wheat supplies out. Expectations are for the year ahead that Russia's crop will be smaller. Last year was such a banner crop. Ukraine obviously will be off in production. So it's hard to kind of look around and see where you're going to get big increases. Can Australia pull another rabbit out of its hat? Maybe, but there's already forecast, and I don't know why they do this, but forecast for Australia's crop to be down a third next year because of El Nino.
Mhm.
That seems to be an awful big production estimate cut, um, but El Nino's had big impact on Australian crops in the past.
Well, we're having a conversation here today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, livestock, let's move over there. Kind of
Mm-hmm.
a rough close in the cattle market on Thursday. We were fairly mixed and then traded, I'd say, moderately lower. Anything you saw in that cattle trade on the future side?
Yeah, I saw a massive bearish key reversal yesterday, and an acceleration upward. So here's what can happen. You've got a long-term uptrend. So this is, I'm talking about any markets that trend long-term one direction. A lot of times they all of a sudden accelerate as they get closer to a top or bottom. So I'm not calling a top in cattle, but if the top is in, I'm also going to say, do not be surprised. This was an acceleration. That comes on short covering. That comes on buyers who bought a bunch. They're making a ton of money. They just continue to buy. Farmers stop hedging until you get a signal. And we got a big up day yesterday, followed by reversal downward. And at the end of the day, you had a range that was larger than the previous day, Jesse, and a poor close. And then today you didn't get a snapback, and you end up with a weak close again. Not dramatic, but down 22 in June, 95 in August, but another weak close, closing toward the lower end of the day. So it's kind of gut check time. I always argue that when I see reversals, it's not the day after, it's really the second day after. So tomorrow will be a big test. All of a sudden it blows right back. We kind of maybe not worry about it too much. But if it can't come back or has another weak finish, it's telling me the bulls are kind of maybe pulling their money out before things get worse.
Well, and thinking about cash country, I know especially with
Mm-hmm.
June live cattle has been trying to keep pace with the cash market here, and I know we've seen plenty of activity keep going up and up and up. I think some dress sales this week, $10 higher in the north,
Mm-hmm.
waiting on southern activity. So this cash market still continues to be in the driver's seat. It feels like, Bryan.
It does, which is kind of astounding considering that lean hogs and pork prices have gone a different direction, and
Hmm.
poultry's out there, and trying to figure out common sense, why is that? And I guess the argument I've heard, which probably makes as much sense as any others, that the consumer is so used to everything else going up, they haven't cut off on beef yet. They're just like, well, everything go up to eat. It's 25% higher, no matter if you buy McDonald's or you buy, a steak somewhere, and you see some restaurants kind of 2-for-1 deals and this and that and the other thing. But I don't think they've cut back. But common sense will tell you that we have tight supply. But when you look at this area of demand that's been focused in the beef market, I just think it runs out of gas at some point. I know I've been kind of worried about that for some time. We talked about, boy, if cattle can hit 170 and all of a sudden they just blow right through it. Well, they hit 170, and now they seem to be wanting on the deferred months, August, October, maybe moving back down toward 170. But that's a lot for the consumer to absorb. And I just got to think that the consumer at some point just is going to substitute out. So that's my big concern for cattle producers, is not the supply side. It is the demand side and or the trading side. Traders that
Mhm.
push this thing higher, they can push it lower.
Very true. And one other thought with hogs here, I've just noticed that spread between front month June and July, which will be front month soon, over the cash index is $4 to $5 right now after Thursday's close. So that's interesting. But the hogs have maybe felt like they've at least for a time established a bottom, so to speak, and bounced off of it a little bit here, Brian.
Yeah, what a brutal market slide, and they've had a good recovery and now dropped here the last two sessions, and they're kind of going to find their way. I think, and I'm reaching a little bit on this analysis, but we've seen and we've been expecting good export, so both seeing and expect. But when you see like China's export numbers this week were down significantly below expectations,
Mm-hmm.
it's like getting back to that theory of, whoa, is there that much money out there to chase things? Apparently, they're not chasing some of the Chinese products. That was pretty significant this week, and I kind of was taken aback by that, thinking that's not a lot of good sign if you're selling corn or beans or pork to China when they're, I don't know if it's just manufacturing, but whatever they produce and they're selling, you're just selling less. So there's just less income. Period. Um,
Yeah.
that might have been sort of the tipping point in hog. Maybe somebody kind of smelled that out about a month ago, and we really kind of nosedive. I sure
Yeah.
didn't hear about it then. And the market didn't know about it based on the pre-report expectations. But I suppose if you're in the business of exporting pork, you might be hearing some things a lot sooner than some of these reports will indicate.
Sure. Some things to definitely think about. Dairy market, any notes there for us this week, Brian?
Oh, we had a glimmer of hope, and then it fell off the table today again. So it's just kind of an ugly picture right now. It had a couple of good up days, and today, pretty ugly days so far. So too much supply. I haven't talked to anybody that's actually seen it. I've heard of it. I've had a couple people question me on it, so it's out there. But talking about dumping some milk, that is, plants can't take it all. They just don't. So they're probably
Mm-hmm.
telling producers you only can bring this much, and what's the producer do? Well, the rest goes in the manure pit or somewhere, I guess, or we'll take yours this week, and this guy over here will take not all of his next week. And yeah, I think we're just at that capacity. You just got out of school, so you don't have the fluid milk consumption in the school crowd. So that's another negative. The silver lining to all this is that things have gotten cheap and demand will grow out of this. And we're already, I read an article yesterday. I can't remember the pizza's name, but it's a large pizza maker, and so I won't use anybody's name. But the gist of it was they're enjoying buying cheese 25 to 35% cheaper than they were a year ago, and they're making money with that. That makes sense. So good to see that there could be underlying demand market. And I'm sure a lot of these cheesemakers are sort of licking their chops, buying this milk cheaper or spot milk, and likely to make some stockpile of cheese, and then as demand cycles back in late summer and fall, and I know it seems like a mile away, but it won't be too long when we'll be talking about Christmas buying and those type of things. So
Yeah.
I think demand will help clear it out, but we just haven't seen that evidence yet that in sort of a tougher sort of inflationary period that we've pushed production downward. It's
Mm-hmm.
continuing to hold or increase a little bit.
Good thoughts for sure. Brian, before we let you go, anything else you want to mention or reiterate for folks today?
Balance. I'll talk about a balanced approach just real quick. I'm looking at corn, and no one should be shocked if 30 days from now corn is 75 cents cheaper or $1.50 higher. So how do you manage that? And that's balancing. How do you sell responsibly? How do you not get buried if we turn this drought monitor map a lot uglier than it is? How do we defend already moderately low prices that can get ugly if this drought monitor map shrinks or disappears. So balance, talk to your advisor, call us if you want. I think you want to be strategic and not so much on the sideline, either out guessing it or on the sideline doing nothing, which is a choice, and that's a boom or bust. So you might do really, really great, or you might have a big problem here.
All things to consider. And as you mentioned, if folks have questions, they can give you a call. You guys have a great website as well, email. So many ways to get in touch, isn't there, Bryan?
There is. And I always like the calls because I can kind of hear more so than I can read what somebody's maybe asking me. So that number is 800-334-9779. Bryan with a Y, so BRYN at totalfarmmarketing.com if you want to email me, or take a look at our website, totalfarmmarketing.com. A lot of good resources there, and then ways to connect with us or myself as well.
Fantastic. Bryan Doherty with Total Farm Marketing. Always great to talk with you, my friend. Have an awesome week, and we'll talk to you next week.
Thank you, Jesse. Appreciate it. And safe early start to summer for everybody, and good luck, and stay balanced.
We will talk more about being balanced, I'm sure, next week with Bryan Doherty at Total Farm Marketing. That is going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.